Hello, everybody. Welcome to Premier Network of Financial Advisors recorded webinar series. Today, we're joined by Trent Schield from Flexible Plan Investments. Trent is going to talk about flexible plan investments, their people, their process, their investments, and specifically about the self-directed brokerage account market. So with that, Trent, I'll turn it over to you. Please introduce yourself and take it away.
Awesome. Sebastian, thank you so much for having us. We're really excited at Flexible Plan Investments to be able to support you and everyone at Premier. I know how fast you guys are growing, and we're trying to give you some good catalysts to keep that growth rate at the curve that you guys are comfortable with. On that, there's a race to these retirement assets, is that you no longer have to wait for clients to roll over. It's pre-rollover opportunities. And I'm going to break that down into very simple bite-sized parts that you know you're not alone. You don't need to know everything around the SDBA market and who we are as a partner to help you reinforce and build and why you would choose Flexible Plan as your partner. So diving into this, I just want you to picture your clients have spent decades contributing to the retirement plans, their 401ks, their 403bs, and more. What happens if they're not actively managed before they retire? There's a lot of different parts. Markets move in cycles, bull markets, bear markets. We're built for those market cycles. We understand the lost decade. We understand how frustrating those ups and downs truly were. And not that we can create an absolute smooth ride, but we absolutely work to the best of our ability to create the smoothest ride for your advisors to your clients. So I'm going to show some slides here to walk you through a little bit on what we have and what we can offer. All right, so let me jump to this presentation here. So truly, this is the name of it, is Flex Plan Strategic. A little bit about the opportunity in the SDBA so you can kind of take it for real. This space represents the largest untapped growth market. According to Schwab, according to Fidelity, and a lot of other sources, we were able to extract some of the data, but with over 3 trillion in assets and more than 100,000 plans offering self-directed brokerage account access, this is for real. The message is clear. Whoever reaches the participants first with this wins. It's an advantage. It's not theoretical growth. So let's consider some of these trends. And a lot of you are 401k gurus, so you'll see these reinforcements to it. The number of 401k account balances over 1 million has skyrocketed to over 537,000. And guys, that was in 2024. So now we know that that's going to continue its same growth rate that it has of a 27% year over year increase. That number is growing. I mean, there was another statistic in an earlier meeting I was at this year that there's more millionaires inside of these 401ks than outside of their 401ks. Why? Because, yeah, that's where the majority of their money is. So the average balance has also skyrocketed to over 350,000 and growing. And according to Schwab in a poll that they recently put to work, 65% of participants receive no professional advice inside of their plan, despite 73% who responded to their poll would like hands-on. So there's a need there. We just need to go fill it. Using this slide just as one part as a little bit of a background is that I'm a veteran in this space. I eat, sleep, and drink tactical asset allocation. What that truly means is that we believe in quantitative dynamic risk management at the house of Flexible Plan. We understand the staff, we understand the need, we understand how many different environments there are in the market environments. Our whole entire goal is to have a best practice for you to deliver some absolute cutting edge strategies to your clients. And Flexible Plan Investments powers this. So why FPI is the right partner for this initiative? We've been active in this space since 1981. We've worked alongside of Cambridge for decades. One of our core strengths in managing SDBA accounts on platforms like Fidelity, Schwab, and TIAA-CREF, with full support on onboarding, daily performance reporting, your client and advisor service team at the push of your fingertips with compliance oversight. And the unique is our suitability-based portfolios. This unlocks knowing your client. You don't need to know everything about flexible plans and the in and out. It's really the questionnaire, and we power it. Hands-on approach, and it's actively managed, navigating the market volatility on its ups and downs. And I think all of us can say that volatility is here to stay. So, what we believe in, and we really try and put this on the map of what we do best, is dynamic risk management, true diversification, powered by multi-strategy portfolios. That might sound really complex when it comes down to it, but what quantitative versus qualitative truly is the difference between the markets dictating our portfolio's exposures versus fundamentals, which can be baked into quant because they're numbers, but then those fundamentals can get stretched into the future with forecasts. As an example, a lot of people are coming off saying that PE ratios are all-time highs. They're stretched. It's time to take the profits. It's time to get out. Well, we've been here before. That same period of time that comes back to some memories was 1998. A lot of managers bailed out of technology. A lot of managers missed a lot of the international run because the PEs were at all-time highs. They thought that they were not going to be able to go any higher. And surprise, remember 1999? So my point of it is we were all in, risk on through 1998, 1999. March of 2000, much different. The market started to downtrend. The momentum changed. There was more sellers in the markets. There was more bears than bulls. We exited the market. We had a heavily vested in safety of money market for our clients. We believe that that's the truest way to be able to respond back to the markets is not to prospect the idea that you can predict the market. We respond to the market and we do it quickly. And that comes into true diversification. We look at all strategies, all asset classes beyond stocks and bonds. We look at alternatives inside of these retirement plans and a multi-strategy portfolio. So what that truly means at our extent is all of us believe in diversification. But the true diversification is when you diversify amongst styles of actively managed strategies instead of just one style, one signal, because there's a lot of risk in doing so. We would much rather have a diversified risk. Then the constants, what we can offer you. Innovative fintech tools on our website that's state of the art and proprietary to Flexible Plan with My On Target Investing. It's a custom benchmark for each and every one of your clients that outlines their goal on the return and a dollar amount. And we march towards that every quarter with a black line charting towards it. Okay, so it's that do you know your number? We run it through a test on Monte Carlo, 1,000 different simulations to give the probabilities of outcomes. And that majority of those probabilities is what we chart it towards. Then you don't get lost as an advisor. We have your business analyzer, which is a dashboard. It shows all of your clients. So let's hope we get to a goal to where you have a couple hundred clients under management. One viewpoint, you can do the screen and selection built on your largest clients first, your clients that need to be talked to because they haven't been talked to in a while by sorting it by date, by sorting it by the color coding of their on target benchmark. If they're outperforming in the blue, if they're on target in the green, if they're in a strategy watch zone below, we give you all the data points for you to be able to have high touch, high attention to your clients because that's truly what they want. And it becomes human centric service. As much as we believe in technology, we're high on high touch to you is to having 75 employees with white glove service ready to help you build your business. Don't take our word for it. Here's some accolades from some of the best and the brightest in the industry between Morningstar, Think Advisors, the name NACDL Allocation Investment Management Financial Advisor 2015. And yes, these go back a long time, and then some of them are real recent of 2025. My point of it
Hey,
is don't take our word for it. I'm
Trent,
sorry,
can I butt in?
Sebastian.
Yeah, can I
Yes,
butt in
please.
here and just say, could you reshare your screen? I know it sounds like you're referencing, but I don't think the
Oh,
screen share. I dropped a note in the chat, but just want to make sure the screen share is up there.
let me jump. Sorry, guys. Right.
There we go.
All right. And
Sorry to butt in there, Trent.
no, you're fine. All right. We good to go from here, or do you want me to jump back? What's your feeling?
Good to go, Trent.
All right, perfect. So upon this, let me make sure it's still sharing before I jump out of here. All right, good. Sorry for the delay. It's not giving me the full screen. It has this little sidebar over here. One more time, guys. Sorry. All right. So yes, what I was getting at is don't take our word for it. Here's a lot of accolades from some of the third-party firms, kind of 800-pound gorillas that are going to be demonstrating the same purpose on it is that they believe in what we believe, and we get rec high recognition on this. And here's some of the best and the brightest showing that. Now, bringing it through of introducing the power of the portfolio that will be managing the success in the self-directed brokerage account space is called our Flex Plan Strategic for SDBAs. It's a proprietary strategy that we built around specifically for this space. It's a very popular strategy. It's one of our fastest growing in the marketplace. It uses our most popular sub-advised mutual funds, high recognition, and it has the ability to service smaller accounts. That's one of the other thresholds a lot of our competition had in this space previous to us is that a higher net worth client from its side. We bring this down as we believe no family should be left behind, and we give this on a smaller account. And a great payout to you as the reps for building this inside of our advisor class shares, but keeping the costs to a minimum. So really just a refresh at this point, there's no need for you to wait for them to be retired. You don't need to wait for them to roll out. You can offer this option right now in plan and nothing changes within the plan. What do I mean by that? Is let's walk you through it is because there's three breakdowns of how it works. Okay. So let's say that you have a large municipality, a hospital, firefighters, police. There's a lot of these plans over here on this core option page, which will be the easiest business that you've ever written in your life because we can manage right here within the core option the universe of funds for that client. And we're talking it's a limited power of attorney on that authorization and investment management agreement, and we're done. Okay, that's one of the easiest places, and we can help you screen and select around plans in your area that have this option available. You just need to reach out to us at sales@flexibleplan.com, and we can do that. Now, jumping over to the other space to where there's that large universe right now that there's over 500,000 plans that are coming back with the self-directed brokerage account option already untapped, ready for opportunities amongst Fidelity, Schwab, and TIA, and others. We don't have the full list here, but these are the three powerhouses, especially Fidelity and Schwab on its side, and TIA. But what this means to you on its side is if the plan allows for fee liquidation, that's great. That's a big hindrance for a lot of our competition. That's the only time they can offer this management. Well, we can too. Any place that they can offer it, we can too. And we have a very long list. Just reach out to us. We'll give you that. Now, the game changer and the breakthrough comes down is if the plan doesn't allow fee liquidation, but they still allow the self-directed brokerage account, we're available. Our funds reside out on that self-directed brokerage account. We have your fee already built inside of our mutual fund to where you just get paid on the assets inside of our funds. A very simplistic approach, and it's the most streamlined and most efficient. So when they come down to it, there's no more investment option restriction. There's no trading restriction. All of this is open architecture for us to be able to go. It's a great playground for us to be an active manager within. So here's some national names. These aren't all the plans by any means. I don't have enough slides here to be able to go through the thousands of plans that we've identified of this self-directed brokerage account, but here's some very large national plans, large names that I'm sure all of you can recognize. And I bet a high probability that you either have a client that's in one of these plans, or you can think of a client of yours that you've prospected in the past that does have a retirement plan amongst this list. List is substantially longer. So don't feel like this is it. Reach out to us and we'll get you the full list of the plans that are available. We can even sort it by zip code for you. But just think of the untapped marketplace that you haven't had the opportunity to in the past that you have the opportunity now. The easiest part is the creation. You identify the plan, step one. Step two is we see if it's a core investment lineup or a self-directed brokerage account. Those two options then dedicate into what paperwork is populated on our side for you as the advisor. We get that in your hands. You go to the client, you fill out the suitability questionnaire, and business is a go. There's a few more steps behind that, but that's the heavy lift to it that we will help provide for you. So, what it means to your clients is zoom out for a second and focus on what your clients truly gain by accessing this Flex Plan Strategic through their SDBA. First, it puts institutional level portfolio management right in their hands. We're talking about some of the same strategy used by foundation endowments, now available inside the retirement plan without needing the rollover or distribution. Everything remains the same. Secondly, is a risk managed portfolio on multiple levels. Each fund is actively managed amongst our lineup. On this dramatically on that side, on a dynamic allocate, and we move amongst our own funds, hiring and firing ourselves, but inside of our own funds, we're making moves. So there's a dual layer of effectiveness of navigating this market frontier that we're in. Final and third parts, get more investment options. They're typically offered. Everybody's asking for them. They want out of the cookie cutter target date approaches. And you're going to give them a lot more for this offering. And also, it's a win-win because it's a hands-on approach between you and your client. So Flex Plan Strategic, what it breaks down to for us to start getting into it, is it's a strategic allocation powered by quantitative risk management. This balances tactical and strategic investing inside of the portfolio. Daily risk management, we're monitoring each and every one of our holdings. It gets touched. It's their wish list. Look at my portfolio. Level optimization amongst the volatility that's within there. Proprietary engines, we use mean variance and optimization algorithm, MVO, to dynamically allocate amongst the four funds. What that truly means is the adaptive position. It shifts between aggressive and defensive funds in these combinations based on the market condition and supports five suitabilities in doing so. So it's not one size fits all. Now let's start breaking through what this truly means amongst the best four funds in the lineup. Our common ground, our STF, our Eckert Managed Future, and our Managed Bond Fund. And we're going to break them down just slightly, not to get too far in the weeds, but to get you excited about what you're going to be able to offer. Our common ground, it's like an RSP 1500. It's a very large universe that we draw from. This is our steady Eddie. This is the portfolio that where we're trying to pick up most core investments. It's broad. Okay, so right now, like we do see some large cap growth as its opportunity within there. We select the best and the brightest, the least volatility, and we navigate through that. The second part we start to jump into is transparency. We pride ourselves in each and every one of our funds that on a daily basis, we update this sheet that you're looking at that's going to show you the underlying investments and where they're held and what they're held in. So you can have some great talking points with your clients. It's nothing that's held under captivity for a quarterly basis, especially when we do have some changes and some trends. The stock baskets that you see over there that you're like, oh, I don't quite understand what all these mean. That's why we build these stock baskets. Some of the best and the brightest stock baskets we build to represent the different style boxes. So within that, you've got state-of-the-art active management, actively navigating the market environments and bringing this through to create the best of both worlds is to, like I said, high net worth investment strategies right there in middle America within the self-directed brokerage accounts. Now on the bond side, what makes this unique is it's an unrestricted portfolio. It's a go anywhere bond fund. So it looks at all of the income asset classes, duration, credit qualities, and evolving based around the market condition. It actively uses equity income to potentially boost yield if we need the beta exposure within the portfolio. So the same way that a lot of some of the best and the brightest bond fund managers rewrote a lot of their prospectuses saying they needed to have equity exposure, we've already been doing that. Okay, we're not going to max it out. This isn't an equity fund. It's a steady Eddie, don't lose my money side of it. Turtle wins the race on its portfolio. But this is where we go to in those volatile periods of times of the steady Eddie side, our defensive instruments. Now you can see how that defense worked out really well for us. This is probably one of the hardest market environments we saw. 2022, everybody got put on the map. The interest rate environment going through the roof. From its side, first time we've seen in a very long time losses like what we have seen in bond funds. And this is just us, the orange line, managed income, compared to the aggregate bond in the blue. You can see the differences as to the risk management that was in effect towards the loss drawdown that we saw within the aggregate bond and the steady eddy within the managed income. So I think that if you are near retirement, don't lose my money is a big part of it. And you get very unsettled as to, 2022, we saw bonds lose 20%. What are my other options? Your other options are get to us and let us actively manage and navigate amongst this market space. The aggressive side of it is our industry recognized tactical asset allocation fund self-adjusting trend following. This is the part to where when we're seeking some growth side, and don't get me wrong, every portfolio from our conservative to our aggressive, depending upon the volatility in the market, could have a little exposure to this. More for the aggressive, less for the conservative. But just because you're conservative doesn't mean that you don't want to make money if there's handout returns within the market. You just want to have something that's managing the risk that when the profits are there to be taken, you take them, but when the profits are to be taken back from the market, you don't let it get taken. And that's the goal of this strategy is to actively manage. And don't take our word for it. We love leaning into this of being a top performer in 2024, 2023, 2020, and 2017. So this is amongst a universe of 297 tactical asset allocation funds that we were able to bring this across to where we were not just good, we were the top. Eckert Managed Futures. For those that say, hey, what happens on that other side of the space? How can you offer more diversification and still make it different to where you're just not overlapping? Because we've seen how well diversification for the most portfolios worked, let's say in 2022, where they said that not an ever case would be that you'd see bonds, equities, and hard assets go down and lose 20% at the same time, and voila, we got it. Then you go back to 2007 through 2009. How well did diversification really help out? What went up during that period of time was purely correlation and volatility. No funds went up. My point of it is this is the outside of this box. This gets to one of the best and the brightest between Eckert Managed Futures. Eckert is a manager. They run a CTA for us inside of a mutual fund, highly and well with known in this marketplace. Um, One of the best and the brightest, has a real track record going back to 1992. They're the sub advisor for this fund. And as you know, managed futures can do very different opportunities and present what we call crisis alpha. When all other markets are under stress, you can see these managed futures do extremely well. So we have that opportunity to go anywhere. The point that I want to bring this across of showing you all these and all these different funds that we construct for these clients' portfolios is we're going to exhaust the market looking for opportunities to make money for your clients. We don't like going to cash unless we absolutely have to. That means that we run completely out of opportunities. There is nothing out there that can be adding any value to your clients' portfolios. And we're not going to take hope as a strategy for more. We're just going to respond, buckle down the hatches, and weather the storm by sitting in the safety money market. So the availability and the account minimum, Fidelity Brokerage Link, 25,000. Schwab, 25,000. That's unheard of. Most out there are running at 100,000. Again, this is that no family left behind. And again, what you're going to run across, like I said, the average account value is over that 350, but at the same time, for those that are just getting started, when you start picking up the momentum amongst these plans, yes, we want all the large accounts, but these small accounts become large over time. It's a great way to annuitize your book of business. So truly, this takes it through our time-saving tools, a heavy and hard flexible plan to get to work for you. Plan available management tool right on our website, 24/7. You can put in the name of a plan, submit it. We'll get back to you within 24 hours. Simplified account establishment and proposal generation system right on our website, living and breathing for you. Continuous tracking of all paperwork. So once you submit it, we start a tracking process that lets you know through the stages of when it does have the ability and it does go live. Daily tracking and analysis on your book of business, which is reported right into your dashboard. The client holdings on the monitoring system of on target, and daily transparency on our strategy and our account holdings. Unlike anybody else out there from managing funds, usually you can't see that, but on a quarterly basis, we give you daily look through and dedicated support. As much as we love tech, like I said before, we're still going to rely on our human and our support team of 75 in Bloomfield Hills, Michigan, ready to beck and call and put on the white gloves and help you build your business. So the choices from the left side, the investor class share, very low cost, higher minimum on the Fidelity side. Two strategy options. The one that we talked to you about today, the advisor class is our newest rollout, fastest growing product, has a higher payout of 75 basis points, lower account minimum of 25,000. One strategy option within that flex plan strategic, but it has all five suitabilities from conservative to aggressive, everything you need right there. But we give you two choices, a lower cost, higher cost for the investor. Sometimes when you get up into those seven-figure accounts, that investor class share might make a little bit more sense. However, on the advisor class share, for those that are growing from its side, could be right in the palette for you. Point is, we want to give you opportunities. Monetizing your book today, think of your existing clients. Who has 401ks? And if you don't know this is available, don't wait. Let us do the work to identify if it is available for them. All of your existing clients that you do have within their retirement plans, if you haven't seen one of their statements lately, ask them to bring it in. We'll help you identify plans to target market. We'll help complete the bulk transfer paperwork if any of you have any clients that you do want to get moved, and also receive continuous tracking, like I said, going through this, and a game changer of my on target. All of our sales, I think a lot of you met Bob Muldoon at your national conference. We look forward to 2026 to be back. For those of you that are outside of Bob's territory within the Midwest, the South, or the West, we have the best of class to be able to help you build your business at a high efficiency with a high support team. And then you're not left alone on a national account basis. We want to make sure that we're here to support you between Carl Resnick, our Vice President of National Sales, and myself, Vice President of National Accounts. So I greatly appreciate the opportunity. And of course, past performance is no guarantee of future returns. Would love to open it up for any interaction and any questions. And sorry for a little bit of the delay there at the beginning of this call.
Thank you, Trent. Just one quick question. We know there's many players in this field. What sets FPI apart in the SDBA space?
Several parts that set us apart, but number one is going to be that we give you two fee choices, okay, two levels of pricing to be able to deliver to your clients for what's right for your client of our investor class and our advisor class. That's just the game change when it comes down to fees. You don't want anybody to ever lose account of that. The second part is our staff and the amount of time we devoted towards the self-directed brokerage account window to build this easy and efficient for you with my on target, your business analyzer, and then all the tools that we have on place to be able to build customized, personalized proposals for your clients.
Excellent. Okay. And anything else, Trent, you wanted to share before we wrap this call up?
Yeah, just the last part is that a lot of advisors look at this as kind of a black box. They don't quite understand it. It's not a rollover. How do I access it? You mean it stays inside the plan, but you're talking about a self-directed brokerage account. If any of this sounds fuzzy as to how to make it work, we do the work for you. We're not going to lean back on you and say, okay, that's a question that you need to ask your participants' HR for. No, you have a question for us. If we can't answer, we're going to go to Fidelity. We're going to go to Schwab. We're going to get those questions answered about that plan, about the design, and be able to show you and answer you to help you walk that client. You're in full control. That's the game changer within this is when you have that participant, they have their 401k. That movement, because it goes to the self-directed brokerage account, doesn't mean that it all changes for that participant. It all remains the same. Same username, same login. They get to see everything, same contributions going to it, all of it. But now they have somebody that's monitoring their account 24/7. It's a lot like that fire alarm right now. All of us are saying we're at market highs and when is it gonna end? I know that is much more of a successful approach to have a fire alarm inside your house instead of standing in the ashes of your retirement plan because there will be another big bad bear market that does come and don't let it wipe it out. Give us the opportunity to manage and navigate to the risk management because there is risk in this market.
Got it. Okay. Well, we appreciate you presenting today, Trent. For anybody watching the recording, if you have questions, obviously you can feel free to reach out to me and I'll connect you with Bob and Trent. But Trent, just want to thank you again for presenting today. Definitely an interesting story, true tactical management. And I know the SDBA space is something that a lot of our advisors are looking to break into. So as I said, anybody wants to follow up with Flexible Plan and Trent on this, just let us know. But with that, you take care and we'll talk soon.
Thank you.